Good morning, traders. Welcome to BCR Morning Market Outlook. The US dollar index, after a slight gain at the end of last week, is currently maintaining its downward trend, trading around 98.9 in early European trading on Friday. The dollar weakened as the market reacted to Washington's effort to curb high yields through a long-term bond buyback program, with the 10-year US Treasury yield remaining stable at 4.7%. Observing the current daily chart structure of the US dollar index, the index is clearly trading below the Bollinger Band middle line at 99.741 and continues to approach the lower Bollinger Band area at 98.51, with the middle band itself starting to slope downwards. Therefore, the support to watch this is the last week's low of 98.56. If the daily chart breaks below 98.56, it will further challenge the key support at 98. Only a daily close above 99 will reverse the short-term bearish structure and allow a retest of the 100 level. And for WTI, crude oil is currently trading near $86 per barrel. Last week, the crude oil market tugged below the supply fragility and flow recovery. U.S. military escorts led to a rebound in flow at the Strait of Hormuz, but insufficient alternative pipeline capacity means supply fragility remains. The daily chart shows 5 consecutive positive days, clearly indicating a rebound trend since the July lows, currently approaching the resistance level near $87.38, which is last week's high. Although there were pullbacks during the week, the overall center of gravity continued to rise, with the next target being $90. The MACD technical indicator remains a bullish structure. WTI crude oil performs even stronger, rising approximately 6% for the week. The first support level on the daily chart is at $84, which is a psychological level, and a break above this level will target at 82.83, forming a second resistance zone. For gold, on Monday, spot gold traded around $4,650 per ounce. Last week, gold's price hit a 3-month high after the U.S. Treasury announced a possible further expansion of its Treasury bond buyback program, raising concerns that this could weaken the dollar. This rally was supported by gold breaking through the closely watched 200-day moving average at approximately $4,513 per ounce, a key technical level considered bullish by technical analysts. The 14-point RSI also indicates that the current upward momentum remains bullish, suggesting that gold prices are likely to continue rising in the short term. And last but not least is the Australian dollar, which is currently trading slightly above the mid-range of 71 cents, and it's still on track for its 7th consecutive week of gains given the favorable fundamental environment. In the early Asian trading on Monday, AUD/USD rose slightly around 71.65, even though it weakened slightly due to the market concerns about the U.S. Treasury expanding its longer-term government bond buyback program. The Reserve Bank's meeting minutes will be released later on this Tuesday, and the psychological level is around 72 cents, which a sustained break above these resistance level is needed to open up space towards the higher upside target of 72.73.